All right. Good evening, everybody. Afternoon, morning, wherever you're tuning in from. This is the Sunday Market Breakdown. My name is James, and for those of you who are joining for the first time, this is the time of the week where I run through my trades from the week. If you don't know anything about me, I am a Forex trader. I've been doing this now profitably for, I lose track, but 5 years, 3.5 profitable. The first part, not so much, struggling trader. And now I also help other guys cut through a lot of the noise and the crap that we see online when it comes to Forex education and teach my approach to the markets, which I believe is a lot more laid back and more, let's say, friendly for beginner traders, and also for traders who have had a hard time getting profitable over the long run and staying profitable. The main goal of the training that I do is to try and help people get funded, access capital. I don't believe in trying to double your account from a small size and kind of scale it that way. I'm a big believer in learning the skill of trading and then applying that skill to acquiring capital. And once you've got the capital, then trading becomes a whole lot easier. Just going to give it a couple of minutes for people to join. Those who are still joining, I see we've got some comments coming through. We've got UG, hello, just joined. Let's smash the market. Yep, that's what we're here to do, UG. Hello, Mahal. Hello, Mike. See you joining us. Great to see. What else we got here? You just now appeared. I think the first part was cut off. Could have been. I'm still getting used to the whole YouTube live thing. Finding my way as a YouTuber, God forbid. I'm keeping it real here. Not really sure what I'm doing on YouTube other than trying to help people learn the ropes of trading and cut through the noise, some of the crap that's out there. But yeah, I'm just going to give it a couple of minutes. Whilst I'm doing that, I'll flick into what I'm going to be sharing today. So once again, Sunday Market Breakdown, trades taken this week. I'll be covering why I took them. And then I'll also look at the week ahead, mainly the economic calendar. I don't specifically trade fundamentals, but I do think you need to use them as part of your approach to trading. If you don't understand how the whole market is moving and you're just trading a specific strategy, that is where you're going to be caught out as a trader. Market conditions and understanding them is one of the key things that you need to fully understand in order to be consistent. The same strategy that works one week may not actually weather the storms of a new market condition that comes in, and you need to know when not to be trading as well as when to be trading. You need to know when to be trading more aggressively, and you need to know when to trade defensively. I see we've got Lubomir here too as well. Great to see you, man. And yeah, most of these guys are coming in from the community. So before I do get into it, I will just say a few things on that. Again, my whole reasoning for doing this is that I really want to awaken people to real trading and how real profitable traders stay profitable and consistent in the market. So I've got this community. It's 100% free to join. Everybody on the call will probably vouch for the fact that the training in here that I give inside the classroom, it's the Leveled Effects Masterclass. The first part of it is completely free. It is the part that you need to understand in order to be able to trade the way that I do. I do also run a premium group, but that's more for people that are taking this really seriously, that want to commit and are going to basically trade with me on a daily basis, do our analysis together, and basically level up so that you increase your chances of getting funded and then staying funded. So it's leveledeffects.com. You can click on the link there. It will take you to the community, or you can just go directly to school.com/leveledeffects. The link will be in the description below if it's not already there. So I invite you to come and join that. If you consider yourself somebody who's interested in learning how to trade Forex and understand how the market really works so that you're able to become a profitable trader. In here, with developing traders, you're not going to be profitable by following my 3-step system, 1, 2, 3, and instant riches. That is utter nonsense. But whilst there is work to do, it isn't difficult. You just need to apply yourself and get out of your own way. So anyway, that's all I'll say on the Leveled FX community. If you want to join, again, it's school.com/leveledfx. I see my camera has frozen. I don't know why that keeps happening. But let's try and fix that. 1 second. And we're back. Sorry about that. I've been having this problem with my camera all week. I do not know what's going on with it. I use my iPhone for the camera. I bought it specifically for this. I've been an Android user through and through up until that point. The camera freezing is really not doing not really doing Apple any favors to try and win me over as a customer, I have to say. I do use a Mac, but my God, the iPhone, not a fan, but hopefully it can improve for the rest of the call. It's been cutting in and out quite a lot. Anyway, let's get into it. Again, we keep things raw and real here, including all the technical issues. So, yep, thanks guys. I see it's working. You are not the first streamer camera freezes. I don't know how many people you're following where the camera freezes on the streamer. I can see when it freezes, but yeah, unfortunately, I usually spot it too late as I get lost in the waffle. But yeah, quite a few trades this week. 1, 2, 3, 4, 5, 6, 7. One thing to mention on the community, since starting it, my trading has also seen an improvement. And I think it's just because teaching people what I do in the community is also a good way to recap and rediscover my approach. And I know that sounds a bit weird, but trading is a very lonely game. And so it's only you to keep yourself accountable to your own rules. And so, yeah, being part of a community, myself included, even though I started the thing, is actually hugely beneficial. So highly recommend getting involved there if you can. Now I know that they use iPhone for camera. Oh yeah, the other streamers, right? So anyway, Euro Aussie, Euro CAD, both in the same day. Let's get into that. And whilst I go through it, I'll also just explain for those of you who are new, my approach to the market. So what I'm talking about actually makes a bit of sense. So long story short, I use levels specifically. They, for me, are the number one thing that I believe provide the best opportunities in the market. The idea is that if price moves one way heavily, like a nice strong move, like what we've seen on pound Aussie here, this strong move up, at some point, traders have to take profits, which means taking a trade in the opposite direction. And when they do that, it provides a pullback. And whilst I would love to be able to predict the future and guess which way the market's going to move, I can't. And nobody can. If they could, then they'd be trillionaires. And so rather than trying to guess the market and how it actually moves, we wait for this scenario to set up. And when it does, the chances of a pullback occurring are incredibly high. And so when that pullback does occur, it looks something kind of like this. Price will be moving out of an area all of a sudden, and then some traders will describe this as a breakout. It'll move strongly in one direction. It might consolidate for a minute or two, and then it will then continue in a very strong way into a level. So if we use this gold gold line here as the level. That is how I put weekly. Oh, my camera's frozen again. This is killing me, guys. Just a sec. It's absolutely killing me, this thing. Anyway, hopefully it won't mess about too much. So the audio should be fine anyway. But what I was saying there is that the strong move into the level, so if we just use this gold weekly line as the example, when price moves in like this, we expect to pull back. And it will be typically something like this. So it will pull back to what I consider the first area of potential struggle. Now, what is the first area of potential struggle? It is where price has previously formed what I would call a footprint. And this footprint is kind of like where the market leaves a trail behind it, how it actually reaches a level. And so once price actually comes back into that, it's going to struggle. It might still come down and break past it, and we will see that. You know, it might do something like this. Traders will call that a head and shoulders pattern. I don't care about patterns. I don't think that's the way to trade. And price could continue. But it's a big could. And I'm not trying to predict whether it will or whether it won't, right? So I call this the first area of potential struggle. Therefore, my first target profit is going to be around here, represented by this green line. And my entry is going to be up here, just in front of where I've identified a level to be. And how we identify these levels is literally candle body closes around key levels on the chart, which you'll see when I get into the trades I've taken this week. So that's how I trade. It's dead simple, super easy for beginners, and it allows traders to focus on all the other things that I feel are far more important for the development of a trader. Things like your psychology, following your plan, and journaling, and then learning from the trades that you've tracked and journaled. So now what I do is now I've covered that, I'll just get into some of the trades that I've taken this week. Guys, give me a thumbs up if the camera's all good now. It seems fine on my end, but God. So, Euro Aussie short. I believe this was on Tuesday. I don't think I took any trades on Monday. So I'll just jump to Euro Aussie now. Cool. Nice. So, where were we? Back here. So if I replay the chart and we go back to it. This is what I was looking at on was it Tuesday? Yeah, it was Tuesday. So what we had here is what I would call an intraday key level. I'm on the 4-hour chart. And so what I would typically do is place my level on the candle body close here. Now, then the next thing I do is I check to see what kind of drawdown I'm inviting with that, looking at the wicks. So last time price moved off of that level, we do see that there's a 15 pip wick left behind. That's absolutely fine for the way I trade. I don't mind drawdown. I don't think traders need to be afraid of it. It's typical in almost every trade to go into the red before you go into the green. And the more you trade, the more you'll find that to be the case, and you just get used to it, and you don't start panicking about your trade going against you, and you know, tight stop losses getting hit. We don't want to see any tight stop losses in the trading strategy. It's not about that. It's about giving enough room for your trade to breathe and play out. So, you know, I don't advocate using tight stops. I don't really care too much about risk reward. I think it has its place. I do think it's important, but I think you give your permission, you give yourself permission to place stops that are tighter once you actually have the data over a larger set of what you've collected in your trade tracker, being your journal, right? And so what I mean by this is, rather than just taking a strategy where whoever's come up with the strategy says it's mechanical, like every single trade you take is put your stop loss at 30 pips away, something like that, right? The market doesn't care that you want 30 pips. The market is the market. It has left its structure behind, and therefore you need to be able to use the market to place your stop losses, and how far away you need to place it, You will build that data over time by tracking your trades, the entry that you take, and the first area of potential struggle. So for me, developing traders in the community, the first job I have to do is to build their confidence on taking the levels. By doing that, what they'll do is build a picture of just how far price typically goes into drawdown each time they take one of these particular setups. And over time, they'll see this across different pairs. They'll probably start to favor some pairs over others. Or what I would prefer they did is understood that some pairs just require a larger drawdown and a bit more room to breathe. And therefore, if it's a yen pair, for example, a more volatile type of pair, or something like gold, you can't be placing 20 pip stop losses on everything. You're just going to invite far more losing trades into your record, and there's just no need for it, because you'll then see that the trade will actually just play out exactly as you thought, and you're already out of it because you tried to increase your risk reward, whereas over time, far better for your psychology to have more winning trades and make less money from them. It's not about anybody that focuses on the money side of things when trying to get consistently profitable trading will always find that it will be at their detriment. You have to look at it like a game. Forget about the money and just think about, was my entry good? Yes or no? What can I do to improve it? And then you adapt it. Was my target profit good? Or did price just miss me and then come back on me? Okay, maybe we need to tighten things up here. How are you doing with finding the first area of potential struggle? Okay, so if I just play the market forward, we're on the 4 hour. So you see that was an incredibly strong move in to the level. We came up here, 120 pip move in, got tagged in, went into a drawdown immediately, 17 pips. Again, nothing wrong with that. And then price did actually, if I drop to the hourly, price did actually move away from here. Probably even the 15-minute would be better. And this is what I want new traders, struggling traders, you guys to understand, that holding a trade will come from your confidence. What I could have done is I could have seen that price came into my level, started to pull back. So I went into profit by about 15 pips. Then price came back on me and went even deeper into drawdown. So from the level, it was around 22 pips of drawdown. And then price moved away, right? And then came down and hit my first area of potential struggle. Where did I find this first area of potential struggle? It was taken from over here where there was a consolidation. Price hadn't struggled anywhere nearer there previously. And so I placed it just above that, just here. I believe it was from, on the 1 hour, we just shot through this. If I went down to the 15-minute, you could say there was a bit of a struggle here, but it was so insignificant that I just decided not to use that. And again, my data that I have in my trade tracker has shown me that I can ignore that on most occasions. So I decided to hold on for this area here. And also the strong move in is something else that you consider. Think of it in terms of percentages. If price has moved just 20 pips into a level, like if that was just 20 pips, can I really expect to get a decent pullback from that? Probably not. But because the move in was 120 pips, is it likely that I can take 30 pips at the first area of potential struggle? Probably. I'm not trying to squeeze 30 pips. I'll take what the market will give me based on the structure that it's left behind. But in this case, we came back and it was actually about 30 pips. But I think that's just more to do with the percentage of the pullback. And when I talk about percentages, you can kind of draw this on a chart using a Fibonacci extender tool like this. I do not use Fibonacci's. I don't believe that they have any weight or more weight than trading from levels. But it can give you an idea of like, has price pulled back 50% of the move? Has it pulled back 38%, 23%? This is the standard Fibonacci numbers. And as you can see here, a 38.2 Fibonacci pullback is quite common. But if you start using that on everything instead of actually looking at the structure of the market, you'll end up tying yourself in knots and trying to hold on for the 38 every time, being totally oblivious to the market structure that was left behind. So price just won't get past it, or at least it will get to that point and then it will go off in the other direction. This actually ended up doing just that. So if I'd have held on for, well, I think every trade I take pulls back to the 50% area and ignored the market structure, I would have been stopped out on that trade after having seen it gone into profit, take my profits. So that's it. So that was the Euro Aussie trade. I'll just come out of that replay now. That will go on for a while. Nice and easy. Same stuff we do over and over again each week. Then we had Euro CAD on the same day. So Euro CAD, that was this one back here. I also had it again on the Friday, I believe. So once again, what was the move in? The move in wasn't quite as big as the Euro Aussie move, but it was still decent enough. And so the position on this was taken again from the 4 hour. So you've got to imagine, well, we don't have to imagine, we can use replay. So pull this back here. And you can see here that I'm expecting a reaction from this 4 hour level here, intraday key level. Price moved in a pretty decent way. And as you can see, it just shot back to the first area of potential struggle very quickly, actually. Just have a look at how fast that move was. It was data driven. This was the Tuesday, I believe. And we had the... Which day is this? The 10th. This is next week. So let's go to the 8th. That's now. So we want the 1st to the 7th. Boom. This was Tuesday, and I believe it was... What time was it? I just want to give you an example of how I piece the fundamentals together with technical analysis. This hit the level when it started moving off around 3:30, and I believe that's when we had, let's just make sure this is right, Tuesday 3rd. Yep, 3:30. That's right. We had ISM manufacturing on the US dollar, and basically that started price moving on EuroCAD. So we obviously had some dollar weakness coming through. And so at the time of that, that was what allowed us to push right up into the level. And then it pretty much just shot back within, the price got tagged here. And so then we were out of it pretty much within half an hour. So sometimes when you get a really strong move into a level and it's fundamentally driven by a fundamental driver, you can get an exit on that pretty fast. And I'll show you some examples of that on Friday. From NFP, which we had, which is, a big event for a lot of traders. A lot of people get afraid of it, whereas I think you can really use it to your advantage, using levels as your system for trading. So that was the EuroCAD trade. Pretty simple stuff. Once again, 4 hour refinement on the level, intraday key level. The other thing on this is I do also use average true range. It's the only indicator I use. I'm not a big fan of having lots of mess all over your charts, 5,000 different indicators, making a big mess of it. If your chart looks like a dog's dinner, so will your P&L. So highly recommend not using indicators and just trading levels. So back to ATR. ATR is the average true range price has moved in the last 20 days in a given day. So it plots the high and the low that the market could actually extend to. And so whilst I'm looking for a strong move into a level, the other thing that I am keeping a keen eye on is how far has price extended. Is price overextended? Meaning, is it close to the average true range for the day? Most of the trades that I prefer to take are either on average true range, and a lot of the time you'll see that the level that you have plotted actually aligns perfectly with average true range, or it might be slightly inside or slightly outside. If that's the case, that's a great setup for me, because price is overextended and therefore more likely to pull back, right? So anything on the indicator thing? I didn't upset anybody by saying that, did I? If I did, I won't apologize. It's my, if I could, I would hack TradingView and delete every indicator that, that people use. Mike says a dog's dinner. Yep. That's basically how I see most people's charts looking. It overwhelms me when I see it. I'm like, how do you even manage to do anything with all this stuff on the chart? I even think my chart looks a mess with average true range on it. I hate it. If I can get it off there, I do as quickly as possible. Robel, you said I use only 2 indicators, sessions and EMA. Yeah, sessions is fine. I'm happy with that. It's just, again, like I know what time of day it is, so I don't need that on my chart. You know what I mean? And EMAs are absolutely fine. I actually used to use EMAs. I used the 200, the 100, and the 50. And I also used the 200 simple moving average. Over time, I just realized that it didn't really matter. And more often than not, I ended up missing trades because they didn't align with the particular EMA that I was looking for it to align with. So again, you do you. I'm not here to tell anybody how they should trade. I'm just here to try and help people develop in the easiest possible way. And I think just taking things back to basics is the best way to do that. It's what worked for me, and I had every problem you could possibly imagine with trading in terms of like, I always say that trading is a very thin line between trading and gambling, and you definitely cross it on several occasions along the path to becoming profitable and consistent. So I just think that to get out of the gambling mindset, you really need to start processing everything that you do, putting it into a process. So if your trading strategy is different to mine, cool, nothing wrong with that. Just I would like to see you journaling and tracking the data, and you following that data that you've planned and then tracked. If you're not following what you said you were going to do, you're just literally wasting your time, because gamblers just go again and again and again. Excluding professional poker players and people that do have an edge, you need to follow a process. If you're not, then you're just going to be in exactly the same place this time next year. And I think that is the most, or one of the most horrible things you can do to yourself as a trader, because you just end up losing money, making a bit back, losing money, making a bit back. And it's just a slippery slope to the bottom. And at some point, your confidence will be smashed and you won't be able to come back and do this. So that's my kind of take on why I think you just need to simplify everything. So anyway, that was also a key indicator for the Euro CAD trade. As you can see, price just really respected the average true range for that. I honestly have no idea how that works out so well. I'm not a mathematician. I don't have any financial background. And so I just literally monitor what happens in the markets, write it in my journal, track it in a sheet, a spreadsheet, so that I can actually use the data, and that's how I find this stuff. So you should do the same, regardless of what strategy you're trading. But for God's sake, keep it simple. Right, that was EuroCAD. Next day, the Wednesday, we have Aussie dollar, and that was the only trade I took that day, but it was nice. I'm losing my place here. Aussie dollar. Aussie dollar. That's confusing. All right. How was this? Am I in replay mode? I think I am. Yes. There you go. I just ruined it. Anyway, that's what happened. So if I go back here, this was a really obvious level. Not a daily, again, another intraday level. Why is it intraday? Because on the daily chart, you can't see it, right? It's kind of in the middle here. You need to drop down the time frames to do it. Why did I choose that one in particular? Well, looking to the daily, Aussie dollar had a really strong move down. for Aussie dollar, 80 pips. Actually, the full move, including the next candle, was actually over 100 pips. And I was expecting a pullback. It just so happened that the pullback on that came up to this level here and reacted very nicely. So if I drop down the time frames, we can see that that was where I was looking to do business. And as we moved in, it was strong enough of a move for me to get the trade away. And obviously you can see there that price immediately got rejected at that level and then just shot back in the opposite direction. I think I'd wish that I'd held this one a bit longer. It did go on a bit. But as you can see, I wanted to be out first area of potential struggle. I was looking at this wick over here. I'm following my process. So you could sit there and go, James, you're a bit of a shit trader. Like there was more in it. You could have held on. I could have done, but I still took profit, and I know from my data that trying to run a trade for longer and breaking my rule of taking profits off the table at the first area of potential struggle, I know what that looks like in my spreadsheet. And so knowing that information, I don't care if price continues to go on all that much. If it keeps doing that over time, I am tracking that also. So I track the first area of potential struggle and then what I consider the second area of potential struggle. And if I see that too many of my trades are actually getting to the second area of potential struggle, then I can look to adapt something. My tracker will give me the permission to do that. But until I see that, I'm not just going to go, you know what, I'm going to try and run this, because then it ruins my edge. And that will in turn start to erode my confidence. And my confidence is everything in trading, because I wouldn't be able to show up each week and show you guys this stuff. I wouldn't be able to legitimately teach other people how I approach the markets. And so there's a lot riding on it. And I think everybody needs to look at it that way, because breaking your rules is a really serious thing. The minute you do it, everything resets to zero, because your data is kind of like invalid. It's kind of like giving up smoking or giving up drinking. If you've gone 4 weeks without having a cigarette and then one day you just have one, you've just broken your streak, and now you go back to zero. And that would take a hit on your confidence. I don't even call it confidence, really. It's more of an integral thing. It's integrity. You have to have integrity with yourself in trading, because nobody knows exactly what you did. Only you know. And so that's why it's so important that if you say you're going to do something and you're going to stick to it, you have to. If you can't do that, you're going to find trading very difficult. And the lessons get more and more expensive as you continue to break your rules. So anyway, that's kind of gone on a little bit too long on that point, but I just wanted to get across why I always take profits at the first area of potential struggle, because I don't want to be that asshole that's still holding on to his trade and then I watch it come all the way back to my entry, and I'm essentially just doing that over and over again and getting nowhere. People also take a full stop loss, but they'll never take full profits, right? It's crazy, but that's what we do. We don't want the stop loss to get hit, so we just watch price get to it and then take us out. Another thing that I see. So again, having these rules, having a process, this is what keeps you safe in the markets and making small progress, small gains, and being consistent in the long term. Again, this is not about doubling your account, tripling your account, getting 1,000% return. I'm not scalping. I'm not staring at the charts all day. I'm literally doing this over enough time so that I can build my capital through funded accounts, through my own personal account. I do both. But in the beginning, why not leverage prop firms? They're there. You might as well take advantage of them. So you've not got a profitability problem. It's not about risk reward. It's more about the fact that you're undercapitalized. So if you can learn the skill of trading, that's basically the only thing you need to be thinking about is learning the skill of trading, not how can I make X amount of money in X amount of time. That will just stunt your growth and your progress right from the get-go. Anyway, that was the Aussie dollar trade. Let's move back on to what was next. Gold. This was a really nice one. I had gold and silver kind of set up at the same time on I think this was Thursday, the 5th. Yeah. And I'll show you I know we got is it Lubomir? I think you mentioned to me that you love a bit of gold. I do as well, but you know, it's like when you have children. I really don't think that you can have a favorite. so, so my approach to the markets is understanding how the whole thing is moving, not just falling in love with a particular currency pair and just sticking to that, because what you'll end up doing is forcing trades on that currency pair. Tons of other traders will disagree with me heavily and tell you that you should focus on one pair and learn it very well and be the master of it. If you try and trade everything across the market, you will be a jack of all pairs and a master of none. I don't think that's the particular saying, but you get the point. So I disagree with that. I think you'll be a far better trader if you understand how the whole market is moving. If you understand where everything's positioned in the market because you've done a scan of the whole market each morning before you get your day started, of course you're going to be in a better position than someone that's just staring at gold and trying to understand where it's going to move from in a given day. Because you understand market sentiment, you understand what's driving it. You know, is the dollar driving price right now? Is it stocks that are driving price right now? Is it fear or greed, or, you know, is it a risk sentiment that's driving the market? Are we investors looking at getting their money out of stocks and into safe havens? All this type of stuff you can't gather if you're just focused on one pair and ignoring the rest of the market, you know. So my small rant on that. This was the gold trade on, where's my replay tool? The gold trade on Thursday. I believe this was it. Yeah, Wednesday the 4th. It's because I'm on the hourly. I was thinking that's a lot of candles. So very similar to the Aussie dollar setup, really. This is actually Aussie dollar. What the hell am I doing? Let's go back to gold. Oh, you can tell it's been a long day. Right. This was the gold setup up here. So price had moved away for quite some time. And as you can see here, gold has been just ranging here, and it's been drawing me in because I keep seeing the same level working. That one being kind of this area right here. So you got like a strong move in here and price moved away, but then price came back, retested the same level, moved away, retested the same level, moved away, retested, back, retested again. You get the picture. And so I hadn't had any of those gold positions. I don't like taking positions on instruments where we're at all-time highs. There's nothing for me to go on. So the fact that we tested that level so many times, I thought it would be a good idea for me to have a crack at it. So that's exactly what I did. And I thought, well, we're all the way down here now. If price was to get up there, we'd be looking at a 500 pip move in from the bottom. Not necessarily just the move, but 500 pip move in, which is decent for gold. It would be insane for like a Forex major pair, but it's gold. It moves fast. It does move a lot. But 500 pips, very reasonable. So the move in was just that, basically. So it just kind of repeated what it had done over here already, tagged the entry, and managed to take, I didn't take the full 160 pips on this one. I remember I took 100 and, look at my P&L, gold. I took 131 pips on this. So just there is where I got out. So my first area of potential struggle was identified by that wick just there, I believe, on the hourly. So we'd had this kind of exchange over here where price had come down, moved up, and then moved off that level. And that's where I decided I was going to get out. But yeah, price did come all the way down here. And then I believe it moved back. Let's just see what happened there from memory. I don't remember. Yeah, it pushed back up and then moved off once again. But I thought I'm not going to chance gold again from the same level. I could have done, but no, I was happy with what I got. And then we actually got the bigger move off there where it did actually drop almost 400 pips. And then I got my entry a bit later on in the week. But I don't think I actually took that trade in the end. Why would that be? It's because it's late in the day on Friday. That's what it was. It was 7 o'clock on Friday, and I decided that wasn't for me. So that was the gold trade. Silver happened at the same time. I'll show you that one. That was just over here. Did the same thing, really. Showing my first area of potential struggle was taken from this this exchange over here. This one was a 4-hour level. Is it the 4 hour or the 1 hour? It's the same thing. But I decided to take the trade a little higher up. And the reason I did this is because what I've been noticing on silver quite a lot is it's very respectful of the average true range. And usually where I have a level, it keeps going until average true range gets hit. And so I decided that I'd actually take the trade in alignment with gold. So that gold was kind of my entry for this. And then I ended up taking profits. I'd much rather have been in this one, but I wasn't. I was in this one here. So I ended up taking just 27 pips on silver there. But at the same time, I was in gold, and price was kind of whipping around a fair bit. So because these two quite often correlate, I just took profits where I thought the first area of potential struggle would be on silver, and therefore that was enough for me. The gold one was continuing to run, and so I didn't want to overexpose myself on that. But a decent trade. Could have held on and seen this move, but again, it's just been a bit of a wild week. And also we had NFP coming up on the Friday, which always makes me trade a little bit more defensively leading up to that, because you never know what's going to happen. Price can often quite move into position, getting itself ready for the data release of the non-farm payroll. So again, that was a silver one. It was a profitable trade. Happy to walk away with that. And then we've got NFP day, where we had dollar Swiss and euro CAD once again. So the dollar Swiss trade was very fast. I'll show you this. And we'll be able to see NFP, because if you look at the dollar index, you can see when NFP started. Let's drop down to the 15. Price just went berserk at 330. So initial dollar weakness, and then completely reversed on itself, gave everything back, and then continued to the upside, and then just to play mind games with everybody, went all the way back the other way once again, and then once again went all the way back the other way. So if you try and trade NFP, I mean, my advice is just don't typically try and guess what's going to happen and get a direction for it. Whether you think it's going up or you think it's going down, price will just come and destroy you. And so there's just no point. The best thing you can do with NFP is use it for the market to get going again. The dollar had kind of been struggling to find a direction. On the weekly, we were kind of positioned midway between the highs and the lows. And so it could have gone either way. It can always go either way. But in this particular case, we don't try and guess. So anyway, the dollar Swiss trade was a fast one. It kind of emulated what happened with the dollar index in a way. My level on this was on the 4 hour. It was a nice level because it was from all the way back here, 29th of December, 2023. So there was this level and there was this level. I had a pending order placed. Let me come all the way back. And I use pending orders because I don't want to be scrapping around trying to enter positions. I'm also looking at all the markets. So if something hits and it's a level that I had planned from the morning, then I'd much rather have the order in so that I get the best fill, the best price, and also at the time I've already done my thinking, and so I can just let price play out and just ensure that everything was as it was before I planned. And I knew NFP was coming. At the time, I think we were hovering around here. It was only 34 pips away, but it's a Swiss pair. So 34 pips on the Swiss franc is like 1,000 pips on gold. It's well, not quite, but you get my point. It doesn't move very far, as you can see by each daily candle here. On NFP day, that was a lot of movement for dollar Swiss. Again, it really only moves when there are news events. So for me, it just tagged me in, I think. Let's have a look at the timeline. Probably, like, I think it was seconds. Yeah, it was literally like down and up on the NFP. I got a good fill, and I was out of that at the first area of potential struggle very, very quickly. So that's how NFP should be played. It should be planned trades that make sense, that are on strong levels. This one was from the 29th of December, 2023. And that's what happened. So price did go a lot further. But again, it's NFP. I'm not here to gamble. I'm following my process. And by following my process, I don't care what happens after that. I'll either make a bit more money with the runner that I leave on, or I won't. But I've already made money, so it doesn't matter. So yeah, that was the dollar Swiss trade. Also near average true range as well. Chart looks messy with that on. I don't like it. But yeah, so decent trade there. And then the last one was Euro CAD short. This was a bit later on in the day, but again, the move was NFP. You can see this here. A lot of volatility spiking around. We were I didn't think we were going to get up there, especially when I saw price moving away like this. But I was also waiting on a buy down here. So again, the beauty with my approach is that I don't care if I'm buying or selling, right? I'm not trying to guess the direction of the market. If we move lower, I'll look for a buy. If we move higher, I'll look for a sell. Like, that's it. I'm not trying to guess anything. So when price moved in, it was a decent move in. We'd moved all the way back up from the bottom once again, 80 pips. Am I likely to be able to grab 20, 30 pips off of that? Probably. And so that's exactly what I did. First area of potential struggle. This wick. Remember, market conditions. This is NFP day. This is post NFP, and price hit around 6 o'clock. But we had this strong move in. So I thought, I'm going to take this as my last trade of the week. Didn't take that gold trade as it was a little bit later, but in this case, managed to take around 23, 24 pips off of Euro CAD, and then it came back up again. I think it will drop again, but once again, I'm not looking to hold trades if I don't need to. So first area of potential struggle, and I was out of there with a clear position book for the weekend, so not in any trades. Moving into the new week. So psychology wise, I've got a clear head and I'm ready for new opportunities. And that's why I don't like looking for things to take. I'd much rather not have a trade than have a trade. And I think if you can approach trading like that, you'll do far better, and it will stop you from going in search of a trade. I much prefer the days when I don't have trades. I get so much other stuff done, and I don't have to think about the trades that I'm in. And so when I do get a trade, it's because it's a planned trade. My alert goes off and, well, I said I would take the trade, so I have to take the trade. And that's why I take trades. But, you know, I kind of say it tongue in cheek that I'd prefer not to have a trade. Obviously, if I never had any trades, I wouldn't make any money. And I'd be homeless and forced to live on the street or something of that nature. So obviously I do need trades, but just I'm saying about the approach. The approach is you shouldn't really go looking for it. You shouldn't care. And if you're the type of person that does, and you enter some crappy trade and it goes against you, and then you hit stop loss and you just think, well, I'm an idiot because I've just repeated the same thing again. You'll then see the trade that you actually did plan set up, and it will happen probably within like a few hours of you doing that stupid thing that you just did. And then hopefully then the penny will drop and you'll start to see that actually there's no reason for you to go looking for a trade, because all of a sudden, out of nowhere, you can just be hit with like 3 or 4 setups at the same time. And that is always the case. So yeah, there's always another trade around the corner. You have to be abundant with your thinking here. Going to get into the week ahead now, because I've covered off all my trades. Hopefully that was insightful to some of you. I do the same thing every week. People tell me that they sometimes take away something new each time, so I continue to do it. I might change it up in the near future, but for now at least, I share that with you guys just so you can see my approach and what I've got up to. The this week, and also to prove that, because I think some people will look at how I trade and say, well, my risk reward isn't as good as it could be, and there are far more profitable ways or strategies to trade the market. And I don't disagree with that. I definitely believe there are. But how I trade, to me, feels so natural, and I don't want to say easy, because you have to do some planning and there is work involved. But it really is, once you're doing this like every week, it's not something that you would call difficult. The difficult part is, if you're somebody that's been exposed to other strategies, is unlearning everything that you've already learnt. It's probably the biggest setback I see people have in the community after learning my approach. And the people who have never traded before and are totally new to this just seem to fly through it and pick it up very quickly, which is phenomenal. But it makes sense in a way, because I know that all the bad habits, they die hard, and I empathize with people that have been around the trading track, and whether they've just seen something on YouTube and it was free, then great. But most of the time when I have the one-on-one calls with people, the story goes, I've spent 3,000, 5,000, 10,000 on a course or a thing, and not really got anything out of it, because what was taught didn't focus on how to develop as a trader. It was just, binary things were taught, like, when this happens, do this, when this happens, do that. This is the strategy, which is great, and the strategy probably does work. But as a trader, you just won't make it to a place where you're consistent enough to call yourself a profitable trader without going through and understanding how to develop yourself. So if you want to do that, it's school.com/leveledfx. Economic calendar for the week ahead. I'm glad we've got NFP out of the way. I'm excited for September now, because the markets, we've just come out of August, which is typically very slow. But if you know how to trade a slow market, August, I think I said it maybe last week as well, but now we're officially out of August. August has been my best month this year, which goes against what most people say about the summer months. If you're someone that doesn't like trading the summer months, cool, that's fine. But I'm just saying that everybody trades, everybody has a different approach. And I think the only reason, I'm no one special, and what I do is not particularly clever, but one thing I do think I do very well now is understand market conditions. I understand when the market's volatile. I understand when it's unpredictable. And when I say unpredictable, it's always unpredictable. But I say that in the sense of when it doesn't make sense. When the market makes sense to me, I have an edge. When the market doesn't make sense, I don't. And so if I don't have edge, why am I trading? I shouldn't be. And you should also approach it with the same kind of thinking to help keep yourself safe. Monday, Chinese CPI. That's probably not going to be too much. Actually, to be honest, I need to obviously cover this. Tonight, we've got Japanese yen GDP. So that could be interesting. I'm out of all positions. Knowing this ahead of time is fantastic when you're trading on Friday. Like if you were getting and jumping into any yen pairs and then you got stuck in the trade because it's still kind of playing out for you, and you didn't know that we had yen GDP coming up as the market opens on the Sunday, these are the types of times when you can tie yourself in all kinds of knots and really set yourself up for getting slapped pretty hard. At the same time, luck could be on your side, and this could actually play to your advantage. For me, I'd much rather know about upcoming events, and I think we actually covered this. We covered this off in the daily analysis call that we did in the community on the Friday. Had a quick look at the week ahead, because I like to remind everybody this is what's coming, so be aware of it when you're getting into trades this week. So it's always a good idea to look at the week ahead. So yeah, we've got yen GDP on the tonight. It's technically Monday, and we've got Chinese CPI. I don't really pay too much attention to the Chinese impact data. you can if you want. I just not seen any not seen it really affect my trading by factoring in. So I'm expecting a fairly subdued day on Monday with potential flows on the yen pairs, meaning yen pairs might start to dive once again. I'm highly doubtful that they're going to start recovering. If we look at the dollar yen on the daily chart, zooming out is incredibly powerful because then we can kind of see where we're at. We've been climbing and climbing and climbing, or let's say the yen has been weakening for a long time, and then more lately we've seen the yen drop. One thing I will look at is the positioning of the Japanese stock market. This has a direct correlation with all yen pairs. Those in the group will understand why. So this is still falling off. All stocks are falling off from Friday, as you can see illustrated here by my bold red arrow. When stocks start to get into free fall like this, they are pretty much taking over and driving the market. Look at the US 30, look at the UK 100, the German 40, the Japanese stock market. All of them are dropping off a cliff, which is something I would describe as stock flows. So when money is flowing out of stocks, they are flowing into the dollar. And we can see this reflected on the dollar index on Friday. So obviously it was very undecided because we had NFP, where we had initial dollar weakness and then strength and then weakness, then strength again. The strength again part was due to stocks selling off. And so once again, if you're not aware of the whole market and what's going on, you'd be oblivious to this, and you'd be maybe looking to take trades on dollar pairs. One in particular was pound dollar, which was coming up on the Friday. Crikey, I got a lot. That's from this and this and this. Let's clean that up a bit. So I had this level marked up on pound dollar as a trade on Friday. Price didn't actually get there, but let's say hypothetically, if it did, I would not take it. And the reason I wouldn't take it is because of where we were positioned with stocks. So if stocks continue to fall like this, it means the dollar would continue to strengthen. And if the dollar continued to strengthen, my pound dollar trade would just get absolutely smashed because the dollar is strong and therefore the pound is weakening against it. It's a slightly more advanced thing to understand, but once you do get your head around it, you'll be like, that makes a lot of sense. And that's why sometimes your strategy won't work, because the market is in a flow state where it doesn't care. It's just repositioning itself. And so, yeah, we've got all stocks closed like this on the Friday. And so going back to the economic calendar, I'd imagine, although the Japanese stock market does look like it slowed down a bit more, as did the German 40, UK FTSE, but all US stocks are dropping off heavily, and they affect the dollar the most. So money flowing out of stocks, people are trading, right? So they're trading stocks. What do they get? Dollars. And so that's what's strengthening the dollar. And I believe the dollar will continue to strengthen until stocks hit a level. The level I have marked up is here, around the 5327 mark for the US 500. So yeah. Anyway, that's kind of how I'm looking at Monday. Potentially a play on yen pairs hitting a level, but it might play out whilst I'm asleep. I'm not going to stay up for the market open. I'm GMT +3 right now, so it's far too late for me. Tuesday, we've got Euro harmonized CP index of consumer prices, so we might have a bit of a movement on the euro, but probably more so on the pound, as we've got employment data. So we've got euro at, let's put this in the right time zone. If we can do it on GMT, it's fine. So euro happening at 6 a.m. GMT. Pound employment data that are beyond the London Open. And then we've got a speech from Governor McClem from the Bank of Canada. So no doubt that will be just following up on last week's data that came out on, I think it was at the same time as NFP. I believe it was the interest rate decision. I'll have to go back and check, but yeah, they'll be doing a speech on that. So just be aware of any volatility on CAD pairs. If you see that on the Tuesday, then that's why. So again, not looking to try and work out what the market's going to do. What we're doing here is we're making ourselves aware of what's coming this week, so we can start to think about potential levels that would get hit, and also make sure that we're not getting into anything ahead of like very high impact news coming out. We've got the presidential debate as well, which will be happening Tuesday night. So we might have dollar volatility occurring there. Again, I will be asleep for this, but knowing that that's coming this week may influence whether I take any trades before Wednesday, especially across not just the Forex majors like pound dollar, euro dollar, Aussie dollar, New Zealand dollar, whatever. It also affects everything else, like the Forex miners, pound Aussie, euro, New Zealand, like everything gets affected by the dollar. So I may end up not taking any trades until after Wednesday. It just depends how the market starts moving next week. I'm hoping it's just going to move in a normal way, but you never know. Presidential debates can be volatile. Then we've got dollar CPI as well later on the Wednesday. So potentially a very volatile day on the US dollar on Wednesday. So just be aware of that. Thursday, we've got we've got the European Central Bank's monetary policy statement coming out. Rate on deposit facility. That could be a big one for the euro. So Thursday, be aware of that. That's happening around midday-ish London time, 1:15. And then a press conference later in the day where they talk a load of nonsense and price then moves a bit more, potentially. So just be aware of that. Producer price index. So we've got quite a heavy... it's still quite heavy on dollar data next week. So I'd expect to see a lot of opportunities. Coming right out of August, where we've been really quite light on data, straight into like bang, bang, bang. We've got pound news, euro news, dollar news, all coming out. And it's all fairly chunky stuff. So be aware of that. We've got the pound monetary policy report hearings. I'm not sure we'll get much out of that because it's a report being released, but you never know. Just be aware of it at the time. For those of you in the group, I'll shout these out as they come anyway. Friday, fairly light. We've just got the Michigan Consumer Sentiment Index. And that's it really, the week. But I would expect, looking at the week on the whole, I would expect a much heavier, well, not heavier, the week is heavier on data. I'd expect more movement in the markets than we've seen in the last few weeks, providing more opportunities. So for those of you that are in the community, this is the time to get your trade trackers filled out and be prepared for the week ahead. If you fail to plan, you plan to fail. The old saying goes, and it's so true in trading. If you're stressed when you're entering a trade because you haven't planned, your IQ halves, and you just start behaving like a chimp. And if that happens, then the decisions you make are going to be terrible. And once the storm has passed and everything's calmed back down, you'll start having that negative self-talk with yourself for making the same mistake that you keep making with your trades. But if you want to stop making those mistakes with your trades, you can join Leveled FX, and I'll be more than happy to help you out with some of the stuff that I've covered off today in this live stream. So I'm going to wrap things up there because I've waffled on far too much today. I know you guys may have any questions or comments or whatever here, but thank you all for joining in. I do appreciate it. Your support keeps me going, and it shows me that I'm doing something right here, and you guys are getting the help that you need, and it's really nice to see that and to hear that. So thank you. And I'll be back next week to do it all again. For those of you who are in the group already, I'll see you bright and early tomorrow for another wild one in the markets. Until then, take care. Have a great rest of your Sunday.